All right, what's up, guys? Thank you so much for taking the time to just kind of watch the video and give me your time of day. My name is Mustafa. I recently went to a amazing real estate conference by Tom Ferry. It's their summit. They do it every year. But we got to hear from the president of a company called Keeping Current Matters. His name is David Childers. Phenomenal guy. He went through some amazing market stats that I wanted to take some time and fully unpack with anybody that is interested in learning a little bit better about what the reality of the marketplace is, right? And so one of the things I want to kind of start with is what David sort of explained on the front end, which is that, for us as realtors, we want to be good salespeople, we want to be good people within the community, we want to be good leaders ultimately at the end of the day. And what makes a good leader really is somebody that helps define what reality is. And so that's what I want to kind of emulate what David was saying here in this video, as well as be that resource for the clients, for the buyers and sellers, or even just friends who are looking at the marketplace today, unsure really what to make of it. That's what the goal of today's video is to try to help give you a market reality check, right? So that you can understand what is the true situation that we find ourselves in here. And we're going to talk about stats as far as the country as a whole. So that way, any one particular neighborhood, whether it's St. Pete, whether it's Tampa, whether it's Texas or New York, all those micro markets will have their own nuances. But what we're talking about today, at least, is going to be about the U.S. as a whole. So what I want to start with is this big number, which is 4 million sales. So I'll move my head out to the side so you can see all the stats before I move myself over here. So the reality is this, on average in the last 3 years, we've seen about 4 million homes sold. You can kind of tell from here, right here would be the COVID era increase in the market. And then right afterwards, you can see when rates increased and the market sort of slowed down and where the media hype kind of came in to say, hey, this is now a recession market. The housing crisis, the crash is what's going to happen. And I had given plenty of advice to my clients at the time that the level of correction necessary in order to cause a housing market collapse is huge. The magnitude is incomprehensible when we're talking about a housing market correction. So what you can see here from 21, late 22, late 21, early 22, all the way down to 2024, you'll see that slowdown. What we're looking at right now is units. How many homes were sold in the US every single year? And you can see after 24, it sort of stabilized out. There was not sort of a continuous cliff. There was a deceleration and then a stabilization. And so the gist of what I'm trying to explain here is yes, the market did correct. It did adjust from the early days when rates are rock bottom and everything was appreciating off the charts. But the market today is not continuing to crash. It's holding steady. So that's just really, really helpful to understand is over the last 3 years, it stayed steady. And over the next 2, 3 years, we kind of expect the same thing to happen. I don't expect anything exciting. It's going to be boring. It's going to be the same level of appreciation, kind of the same pace of the market. And that's healthy. I think that's hard for people to wrap their heads around sometimes because we're so accustomed to that COVID era market. But reality is you do want relatively level amount of home sales, just a subtle 2 to 3% appreciation. That's what's going to help bring affordability back into our control. Right now, the concern or the crisis or the big conversation topics for anybody that wants to get political is that homes are unaffordable. Well, with the appreciation that we have today and the level of sales that we have today, year over year, this is making that a lot more of an attainable reality where most Americans can afford the medium price home. All right, so let's talk about three big reasons why sellers are hesitating right now. So if you go back, that one slide, you can see the number of transactions have limited. But what's even more remarkable, and in my market in St. Pete, the number of homes available for sale in the first place has shrunk actually in the last year. And so there's a big hesitation happening on the seller side. And there's three primary reasons for that, right? Reason one is that there is a lot of inventory. So this perception that during the COVID era, there were no homes, and all of a sudden there's this huge abundance of homes. That is causing hesitation on the seller side. The buyer has a lot of options to choose from. The seller's kind of seeing that, reading that noise, and saying, look, I think at this point we may want to wait it out until it moves back towards the seller's market where there is a lot more fewer inventory. So you can kind of see here at the 2022 lows, we had around 350, 360,000, all the way up to, the peak here. We got just over a million here. Active homes in the US entirely. immediately, right? So reason number one is there's just a lot of inventory, and for the seller, they don't feel like their home's going to stand out, primarily because there's just so many options for the buyer to pick from. Number two, the days on market has doubled. I love David's point about this, where he essentially said, if it doesn't sell in a day, a lot of our sellers are like reconsidering whether or not they even want to do this, right? Because there was this perception things are supposed to be flying off the shelves. It shouldn't stay on the market for more than a week. But the reality is the median time to contract, the days on market, has doubled. I mean, it was 21 days just in 2022, just a few short years ago, to now being over 53 days. So, the reality is if you listed a home today and you priced it correctly, it will take around 2 months to sell. Now, if it's marketed aggressively, your agent is right, they do the proactive things that they need to do, yeah, there's a very strong chance it'll sell way faster than the average. I have homes that we've listed just last month in June where we put it on the market and received 3 different offers within the first week. So multiple offer scenarios are also not uncommon. The reality is, though, it has to be priced correctly, which leads me to the third primary point, which is that these sellers just have a lack of understanding in what the actual reality is for what their home is worth. They did a study and found 83% of sellers expect to get their asking price or more, which is pretty insane when you think about where the marketplace is today with how many options a buyer has to choose from, where mortgage rates are, and how sensitive a buyer is to what the monthly payment is currently. So there's this big disconnect. You have the seller that wants the pie in the sky price and the buyer that wants the rock bottom rate, the rock bottom monthly payment, and they can't do that by overpaying. And so that's really why there are a lot of sellers today that have so much equity in their home. They have a stable job and they've got a really nice mortgage rate. It doesn't make sense for them to leave all that equity on the table in their minds and sell it for a price that's lower than what they think it's worth. So instead, they'll keep it, they'll rent it, they'll stay there, they'll delay their plans until such a time comes that the market moves back into their favor, where they're interested in getting a little bit more bang for their buck when they put their house on the market. So again, these are the three primary reasons. There's an abundance of inventory, it's taking forever to sell a home, and there's this disconnect between what the seller thinks the price is worth and what a buyer is actually willing to pay for it. So I don't know. These were just amazing sort of realities that the slides and that the seminar has been kind of showing me today, and I just felt so empowered to try to share that with my audience and my viewers, because I think that this is important for anybody here locally in St. Pete or Tampa or wherever you're watching this, is that I think these points are very helpful for you so you can understand what the reality is, so you can make a better decision for yourself and your own housing needs. What overpricing actually costs. Now, we've talked about this as a realtor in marketing pitches. Well, if you overprice your home, it sits on the market too long and it sells for less. This is the data that's correlating that and confirming it for you in raw time, raw detail right in front of you. So anything that takes, over 4 months to sell, so that's a 1 month at the bottom, selling for around 7.3% under the asking price, 2 months, 9%, 3 months, 10%. And 4 months, it's almost 15% less than what they originally listed it for. So you can see that gap there. And the biggest reason for that is, again, that seller reality. If it was priced right on the first end, on the front end, it wouldn't need these many price corrections, and it would actually sell much closer to what the seller was originally hoping to get. So again, this goes back to that days on market where, you don't want to get too intimidated about what the median time to contract is. If you're a seller, if you're thinking about selling, or if you're a realtor even, you want to make sure you're managing those expectations and communicating clearly to your client that the longer we try this price out before reducing to what we know is the realistic price, you're costing yourself. And here is the data in the market showing you this is not my neighborhood. This is all homes across the US. Market has shifted. The real reason sorry, you'll have to give me a second. I'm looking at my notes here too. The real reason that there is this big abundance of inventory, this big disconnect, is I do think that the market has shifted to favor the buyers. That's at least trending that way. It's up 57, 52% from last year. And it's really double what the original percentages were, just around that pre-pandemic era. And so what we're seeing is just that the market is now shifting to favor that buyer. If they have the option to wait it out, they have the option to go look at another home next week, they're not going to be as willing to pay the price that you, the seller, are looking for. And conversely, if you're a buyer and you see a home that checks off many of the boxes that you are looking for in a home, but the price isn't really where your agent feels like it's truly worth it, there's some value or maybe some some positive things to take away in the sense of you could be more firm in your price. There's a very good chance another home will be listed next week that has the same criteria that you were looking for in this home that may be priced a little bit more competitively. During the COVID area, there was this time where if it's like, dude, if this house is still available and they haven't received 16 offers, you got to move on it now. Otherwise, you're not going to find an opportunity this cheap again. That reality does not exist today. I think the realistic scenario is that if you're a buyer and you're willing to pay 450 for a home and the seller isn't willing to come down below 500, I don't think it makes sense to jump up. I think it makes sense to wait because you're going to see a lot more options come out consistently over the next few months. So waiting is not costing you more. In fact, it's going to give you more options, at least based on what we're seeing here in the market today. Mortgage rates. So you can kind of see here a couple graphs. And this, what I thought was probably one of the more fascinating parts, the more detail-oriented parts of the presentation that really spoke to me and really spoke to what the concerns are that I get from our clients all the time, which is that they're waiting for mortgage rates to come down so that they can buy, or they're waiting for mortgage rates to come down so the market picks up and that they can sell. The reality is mortgage rates are holding steady. You can see here in the graph where the Mortgage Bankers Association, Fannie Mae, and Wells Fargo have all left predictions, and that's Q1 and Q2. That's Q2 and Q3 of that's the rest of 2026, and 3 and 4 there are the first 2 quarters of 2027. So at least over the next 12 months, the prediction is that mortgage rates will hold steady or range somewhere between 6.25, 6.25 to 6.5%. So there is variability, sure, but that's not enough to make a huge dent in the housing industry to swing home prices upwards for sellers or to sort of unlock new price points for buyers by having lower mortgage rates. So this idea that people are holding out, like if you're waiting out for these 3% rates to come back, you're not waiting really for a shift in the marketplace. You're just waiting for an entirely different marketplace that realistically isn't coming. The real likelihood, the real reality of the life that we're in today, the world that you and I and everyone is walking around enjoying, the market for the next 2 years is a stability market. It's markets are the rates are going to stay steady. Home volume, unit sales are going to stay steady. Transaction counts are going to stay around the same. The median home prices are going to steadily rise at a, say a modest 2-3% rate somewhere in that window. So, I don't want to call it boring. I want to call it healthy, but that's what the reality is. So if you're waiting on the sidelines as a buyer for mortgage rates to drop, it doesn't make sense. There's that whole analogy where you date the rate and you marry the house. It's perfect for this. Buy the house that meets your needs, that fits within your current budgets today. And if rates get cheaper in the future, that's just a win for you. It doesn't mean you have to wait until then because there's going to be a lot of other people that have now unlocked new price points. It's going to get more competitive in the areas that you're looking for. And if you're sitting here as a seller trying to decide what do I do, because you're trying to wait for rates, it is not the rates that's holding back you from getting the most value out of your home. It's going to be the pricing and the marketing strategy that you implement with the agent you end up choosing. Again, the days on market, the data is there. If you overprice it and you let it sit too long, it's going to sell for less than what you could have gotten in the first place if you just priced it right. And all of that is nullified if you choose to wait for rates for some arbitrary reason. It just doesn't benefit you if you're a seller. Appreciation is healthy. We did kind of touch on this a little bit, but I want to talk about it a little bit more because David did as well, and I just thought it was healthy. Thought it was helpful, which is that on average we're seeing that 2 to 3% home appreciation over the last 3 years. And so I think the reality is, as we continue, over the last year, we've seen around 2 to 3%, and we're seeing that expectation continue over the next few years. And so what we are really hoping for is that growth in your personal economics. You earn more money as you get a raise in your job. Your wife starts doing something. You pick up a side hustle. Your investments start performing well. As you increase what your financial capabilities are, that rate should be around 3 to 5%. And so for home appreciations to be around 2 to 3%, that's very healthy. That's a win for us because that means over time, if both of those paces stay the same, there will become a tipping point where it comes back into the range for affordability for affordable homes when it comes to the median American, right? Because if you're getting a raise faster than what the home prices are rising to, you will in time, in theory, be able to afford a bigger home, a nicer home, a better home that more suits your needs over time. So this is a good thing for home buyers. This is a good thing for home sellers as well. Maybe they don't like it. You want the 30% appreciation that happened a while ago. But we can all look back on some investment decisions, I'm sure, Bitcoin being one of mine, that we should have done things sooner. But, hindsight's always 2020, right? So again, appreciation 2 to 3% over the next few years. That is healthy. That is stable. That is what we want, whether you're a buyer or a seller. There is a NAR stat that I'll share with you. You can kind of see it here at the bottom. They're predicting the median US home price to be around $1 million by 2050. So, this whole concept of market correction and values tanking, whatever the home price is today, if it fits your needs, there's a strong chance that if you bought it and held it until 2050, it's going to be worth a lot more than what you paid for it today. So don't be concerned that home prices and home values are somehow tanking or that there's some concern. There are bold economists looking at the raw data, making predictions, saying by 2050, the median US price home is going to be around $1 million. I can't imagine what that market would look like or what the median price would look like in a high value market like the Hamptons or San Francisco or LA, right? Or Miami, for that example, if the median across the US was already $1 million. All right, let's take a look at one of the more impactful slides for me, at least. I'm sorry, it's a little blurry for me. I hope it isn't for you guys. It looks like it is, but basically, this yellow, this what, this let's start with the top line, this green line here. Today, we're going to be somewhere around the top here on this side. That is the total value of single family or condos, residential homes in the US. That's about $48.7 trillion. Okay. Now, in that $48.7 trillion, that orange line shows you just how much equity most homeowners have in the values of those properties. That's $34.9 trillion. So there's plenty of equity within that $48 trillion of real estate. Now, of that $48 trillion, 13.8 trillion, which is that white line, is the actual debt that these properties carry. So you may see news articles saying that, oh, the mortgage debt for single family for residential homes is at an all-time high. And that is technically accurate. That is a true statement. But what it's ignoring is that homeowner equity and total values across residential homes is also at an all-time high. The reality is the market that we're in today is really the best market that we've ever been in our lifetimes. And I'm going to reframe this a little bit by saying that equity is always going to outweigh the debt by 2.5 times. Compare that to 2008, 2010, when home values nearly fell below what was owed. You can kind of see it here across on the chart. Right here, you can see when those values dipped below what the debts were. And now you can kind of see where we stand at today. So when we talk about the market, we talk about corrections, and there's this like sort of crisis mindset that happens when we read articles and we start getting concerned. The reality is, vast majority of Americans are sitting comfortable in their home today. The payment is affordable because rates were low. The pricing is affordable because they have a ton of equity. There's a resistance to moving out. There's a resistance to listing my home and leaving some of that equity on the table to go buy something else that maybe they don't see like the value is totally perceived there. So that is the last slide that I have to kind of summarize all the data. At the end of the day, I really wanted to do something like this unique and different just to try to educate everybody that's out there that's interested. Everyone's got different perceptions. People think the market's shit. People think the market's great. People think the market's sort of neutral. I think the reality is the market is what it is. It's going to matter for you and your individual situation. What are the points or the data to sort of focus on? But if I were to generalize it, whether you're a buyer, whether you're a seller, let's just say you're a good, kind-hearted American that wants to make a difference in the community, wants to be a stakeholder by owning real estate or selling real estate or facilitating that transaction, making a space for a new family. The reality is the market that we see today is the best market we've had in our entire lifetime. Values are at an all-time high. The market momentum is pretty healthy. It's pretty stable. And I can expect this to continue for the next 3-4 years realistically. So if you found this video super helpful, please be sure to like it, hit the subscribe button because I'm looking to do more pieces of content just like this. And I'd love to know in the comments below whether or not you agree with my mindset. You think this is a healthy market, that what we have is good for us as a community, as a country, as a whole, as an economy? Or do you think it's bad? Do you think this is not an accurate depiction? You've got your own data. I'd love to see that backed up in the comments below. So thanks again for watching, and I'll see you again on my next video.